Hey everybody, it's Wayne Nichols, and I'm here to give you an update for the covered calls that I've sold in the first week of 2023. But before we begin, guys, let me have this moment right now. You guys know that I am a huge fan of Brad Finn. Brad Finn puts out phenomenal content when it comes to options, selling covered calls, cash secured puts. And I stumbled upon Brad's content in early 2022 when I wanted to do something different. I wanted to generate that cash flow. And so I tuned in to Brad's channel and I began to follow his content. My man truly has written a book when it comes to options trading, and he had a huge impact. His material, I should say, had a huge impact on my 2022. So I owe a great deal of my success to Brad. And so today, on one of my videos, he threw out this very gracious comment. So I'm very appreciative. I'm having a fanboy moment. I told my wife too. I'm like, Brad commented on my post, and my wife just looks at me and says, "Who's Brad?" So you guys know who Brad is. She doesn't. She will. And so thank you, Brad. So let's jump in to the first week of selling covered calls for 2023, guys. You guys know how excited I am because I've got hardcore statistics that show my success. And so you guys can see here, I'm off to a great week. But one of the things that I really want to address, and I've seen this with some content creators on YouTube who talk about covered calls. And one of the things that I don't think that they are necessarily addressing is, they'll say, I made $5,000 in the month of December 2022. And then you tune in and they say, I made $5,000 in the month of January 2023. But I want to point out one of the things that likely happens in that number that they made the previous month or even the previous 2 months can go down because you are going to likely buy to close your position early. And when you are buying to close your position early, you are paying money to close that position. So take a look here at my very first covered call of 2023. You can see here on the 3rd, I wrote a covered call for Apple. My strike price you see listed here, the expiration, and I received, gross premium of $32. But sometime during the week, it was advantageous for me to buy to close that position. So I paid $9. Hence, my net premium is really $23. And so I want to kind of talk about why that's an important number that you have to know about, because if you're following other content creators and you're talking about just the gross premium number, well, take a look at my gross premium number. Right here it says that I made $3,900 the first week of January. That's a fantastic number considering, we only had 4 trading days in the first week of 2023. Guess what, guys? I didn't make $3,987. So we need to go ahead and explain how to properly keep track of covered calls, why a spreadsheet is absolutely crucial, and how you can't necessarily look at your gross premium numbers and say, wow, let me shout this from the rooftops. I made $4,000 this week. No, I did not make $4,000 this week. So we're going to go ahead and break that down. So let's go ahead and start with my spreadsheet. And I have created a spreadsheet from scratch. And you can see here, anything that has a grayed out field with an outcome indicates just that this position that I opened on this date and this time is now closed. And I give a disposition. And those dispositions could be, I close it out early. It could be it expired worthless. I could roll close it. I could have been assigned. So you have to make sure that you have a dialed in spreadsheet before you begin even considering selling covered calls or cash secured puts. So I want to show here why, even though it says I made $3,900.87, or I'm sorry, $3,987, that's not the case. So let's go ahead and take a look at these open positions as well. This is what I would consider to be gross premium. Gross premium being that these positions that are in white are actively open, meaning I wrote this covered call for Apple on the 5th, There's my strike price, there's my expiration, and I received $44. But as you can see here, the expiration is going to be next Friday. So today is Sunday, the 8th. So I've got a full week before this expires. And in reality, when I am selling covered calls, I am trying to close out my position. I'm trying to lock in as much premium. And I kind of go back to what Brad mentioned. Brad will lock in premium 75% or more. And, going back to my experience selling covered calls in 2022, I'm now willing to sell or lock in profits of 50 to 60% if I can open up yet another position in the same week. So we're going to talk about that as well. You know, it kind of makes sense though to kind of give you guys some statistics. So you can see here, first of all, let's take a look here at my stats. So guys, in 2022, I sold 596 covered calls. I think even Brad Finn would say, holy heck, Wayne, that's a lot of covered calls. And that was across 40 different stocks. But I want to talk about my goals and why I think I'm onto something here. My goal, by the way, when I sell covered calls, I do not want those shares to be assigned. I do not want those shares to be called away from me. So let's go and take a look here at my stats. Out of 596 covered calls across 40 different stocks, 5 were assigned to expiration. That's only 1% of this 596 total covered calls were they assigned. And guys, guess what? This was earlier in the year when I wanted those stocks to be assigned. I was more in the wheel strategy that I didn't care. So this is not a bad number. And in fact, I don't think this number is going to be, you know, it's not a bad thing at all. Let's take a look here. 2 were assigned early, less than 1%. Now, those that were assigned early, yes, I did not want that to happen. I did not want to lose my shares. But it's important to note, it's you know, it's not always going to turn out the way you want it to when you sell a covered call or a cash secured put. 2 were assigned early. 3 were assigned early for a loss. And that just goes back to, you know, one of the things that I am doing, even this year, is yes, I am selling covered calls below my cost basis. What does that mean? That means, you know, I own ABC stock and I have 100 shares and I paid $150, but the current stock price for ABC is $130. Well, I am selling covered calls above that number, not above my cost basis. So you have to understand there's real risk, there's real danger, because, you know, if those stocks, right, get called away from you, well, you can see here in 2022, I had three transactions in which I lost, right, 300 stocks total for a loss. And I can tell you right now, it happened with HP. So keep that in mind, guys. You know, I don't want to give you guys just the good. I want to give you guys the bad and the ugly as well. Take a look at this. This, to me, is the most important number. 406 were closed early. So 68%, guys, of every covered call I wrote in 2022, I was able to close it out early. You know, was it $1? Was it a few bucks? Was it, you know, maybe 50 to $100? It really depends on the stock. But for the most part, right, I was able to lock in premium, close it out early, and I lived to write another covered call. I did that 68% of the time in 2022. 9% I let them expire, meaning, you know, it was nowhere near reaching the strike price. And rather than paying, you know, if it's $1, it could be $5, depending on the stock, I just decided that I wasn't going to pay anything and, you know, literally lock in 100% of that premium profit. And then 119 were roll closed. Now, last week, or I should say a couple days ago, I gave you guys, I thought it was a pretty interesting video. I was able to show you how I rolled a covered call to a different strike price on a different day, and I also locked in some premium. I didn't have to pay anything to roll that. And so we're going to give you an example of that today. But take a look here, guys. 20% of the covered calls in 2022, right? So 119, I was able to roll close. So if you take a look at these three numbers right here, right? 97% of the time, I was able to either close out that position early, it expired, or I was able to roll close it. And then, of course, right, best case scenario, after I roll close it, I'm able to also close it out early or it expires. So to me, I mean, I'm not patting myself on the back, but this is why I'm very excited about 2023, because I sold 596 covered calls, and I only began my journey in March of 2022. Now, this is also what I want to point out about why, even though you see that I've made nearly 4K in the first week of 2023, that's not really the case. So let's go ahead and break down what the orange fields represent. And that is a color code that tells me that that position was roll close. And during the live demonstration, I actually showed in a previous video, so you'll have to watch it. I showed that I opened this covered call on the 3rd on IWM. It had a strike price of 176 and it was set to expire on Friday the 6th. Now, when I rolled this, the strike price was above 176. So I either was going to lose 100 shares of that stock, or I would have had to have bought to close that position and essentially come out at a $9 net loss on that premium. So what I did was, and I'll go ahead and sort this by a different view. So let's go ahead and sort this A to Z so you can see IWM on top of the other entry. So you can see here, this orange represents that on this date and time, I opened this covered call, but ultimately I roll closed the position. And you can see here, this next entry only has the double orange field. That represents that it's a roll, but it is still actively open. So again, create your own spreadsheet. I kind of have looked at other content creators, and ultimately I took a little bit of what works for that person and incorporated it. I took up, what works for another person, I incorporated it. However you do it, it's so important though that you are keeping track, because you want to be able to look at your numbers and know, hey, this is how many covered calls I sold. This is, how much I made on this particular stock. So I am all about keeping those stats. So you can see right here, if we were to just look at IWM, right? If you looked at just this entry, you would say, Wayne, man, you made $218 in IWM. No, because technically this is a rolled position, so you have to actually include, right, the entire amount. So I didn't make 218 bucks. I made $209, right? And so that's why you have to kind of look at these numbers and say, all right, well, what about the previous month? And everybody will talk about their previous month. And then it seems to be like the next month, nobody kind of mentions what they had to, pay to close out those positions. So I hope that kind of comes across. But let's take a look here at the one that's going to be a problem for me, and that's Target. And you can see here, Target, I had to roll close this position. But interesting enough, right, this goes back to a covered call that I wrote in the last week of December. So take a look at this, guys. This is my 2022 covered call spreadsheet. And you can see here on December 29th, I wrote a covered call for Target, strike price, expiration date, right? So started in December, right? Closed in January. But technically, before I actually rolled this position, and I'm going to show you that here in a minute, you would say, well, Wayne, you made $284 in net premium. Absolutely. So what happens is I am giving you guys some statistics. And you can see here, if you look at my monthly breakdown, I showed this in an earlier video. You might look at this and say, holy heck, Wayne made $25,000 just in covered calls in 2022. Well, you have to keep in mind, even though that we're, well past December, I may still have open positions. And you can see here, if I scroll up, this is my 2022 spreadsheet. And you can see here, I've got 2 positions open for Ford. I've got a position for Pfizer, SPHD. So I have, right, I've got one for Celebrite. I have another one for Celsius. So you can see here, and look at Celsius. I wrote this in December. It doesn't close to July. So in reality, this December number of, true total profit, right, which right here says 23,459. Well, if you look at this, you're like, well, wait a minute, right? Like your number says 25,000, right? So how did you go from making 25,000 for the year of 2022 in covered calls to this clearly says you made 23,459? And again, that's because during the first week of January, Target, for example, ended up being an issue for me. I knew that Target was going well above my strike price. And it's a good thing, right? Because that means, right, my value of Target is going up. But it's a bad thing if I have a covered call below that strike price. So let's take a look here. Target, I wrote a covered call on the 29th of December, and it expired this past week on the 6th. So before that even expired, I knew that it was going to be significantly out of the money, meaning it was going to be way above this strike price of 149. And so I made a decision to roll this position. And so essentially I had to pay $512 to close out that position, right? So I took a 228 total loss on this transaction. Let's go ahead and cut to the entry here. I simultaneously, right, so I closed out and I opened. So I did a roll. And essentially right here, I opened up a covered call and I chose a 150 strike, but I pushed it out to January 13th. And you're thinking, okay, like, and for that, right, I generated $610 of premium. So right there, you would say, oh man, you made $610 of premium. Well, not really, because in December, I technically took a loss of 228 for the month of December, and I rolled this newer position over to January. So, you can't just look at this one number and say, holy heck, right, he made this much money. Now, guys, as it turns out, right, I mean, it gets even worse because Target continued to skyrocket. I shouldn't say skyrocket, right? I mean, it just went up significantly, well beyond 150. And so I was like, you know what? I don't want to lose my shares. So I'm going to go ahead and do another roll. And that's the great thing about rolling these stocks. So I essentially rolled this target position to yet another, right? So I closed this out. I had to pay $1,100. I've now taken a $500 loss. So I'm upside down in this position, and I'm upside down in the 2022 position, and I opened up a new position with a strike price of 160. In doing so, I opened up with a premium of 1127. So you look at this number, you're like, holy heck, man, he made $1,127 on one covered call. Yeah, but if you actually, right, combine these two, it's really only the sum of $628 when you factor in, right, the previous, net loss I took. And so I wanted to kind of point that out, guys, because I'm really big about transparency. So let's go ahead and let's go back to my 2022 covered calls. And you can see here, guys, that I am currently sorted by the date. So I'm going to go ahead and I'm going to take my very last covered call entry for December. And I'm going to go ahead and scroll up to the very, very first covered call that I wrote in December of 2022. And for the month of December of 2022, if you can see here in the bottom corner, it says I made 14,271. So 14,271. We now need to fill this in because it is now 14,271. So that number, right, has gone down from 25,000 to 24,000. And if we go back over here, you're like, well, wait a minute, that still doesn't equal this number of 2349. Well, that's because, as I mentioned before, right, you could have covered calls that extend well beyond a week, a month, 6 months. It could be a year. It could be longer. So I also know that I had to roll a position that I wrote in November of 2022, and I rolled it on the first week of January. So now I'm going to go ahead and, just to keep things brief, as I say, I'm going to go ahead and get a total number for November. So from November 1st to the last month, I wrote covered calls amounting to $2,503. Well, if I go over here, clearly you can see before I made that roll, November had me sitting at 3,700. So now let me go ahead and put in the correct number. And you can see here, guys, November, I had to roll a call. December, I had to roll a few calls. And so even though, right, the number of covered calls did not increase or decrease, the premium, right, the net premium does change. So take a look here, guys. I now made in 2022, $23,459, which matches this spreadsheet exactly. Now, could that number go down? Yeah, it could. I showed you guys earlier that I actively have a few covered call positions that are open. AMD, guys, look at this, doesn't expire until next week. Celsius, I think I showed you, it expires in July. Traeger, I've got one that expires in March. So this is something I want you guys to be aware of when you are looking at other content creators. And I see this with a lot of the newer content creators. And guys, I'm in the same sort of, I guess, category. I just launched, this YouTube journey late 2022. So take what you hear me say with a grain of salt. But the biggest thing that I see is people say, I made this much money this month, and then I made this money the following month, and they don't actually address, right, if that net premium value has changed from the last month. So you know what, guys, in the interest of time, I'm going to go ahead and close out the video here. We're just under 20 minutes, but I am excited to get you guys the information on covered calls I sold. So let's go ahead and call this part 1, and then stay tuned for part 2, which is coming your way very shortly. Thanks again.